Welcome to Dave's Daily Crypto Take. Today is Friday, January 28th, 2022. Let's take a look at today's charts. At number one, we got BTC at $37,198.43, up 0.50%. Ethereum at number two, $2,424.77, down 2.34%. Tether at number three, $1. BNB at number four, $391.01, up 3.50%. USD coin number five, 99 cents. Cardano at number six, $1.05, down 2.67%. At number seven, XRP, 60 cents, down 1.94%. Solana at number eight, $89.77, down 3.42%. Terra at number nine, $54.54, down 7.67%. And last but not least, Dogecoin at number 10, 14 cents, down 1.94%. Let's take a look at the Crypto Fear and Greed Index. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. And when investors are getting too greedy, that means the market is due for correction. So what we got today is extreme fear at 24. Yesterday was extreme fear at 20. Last week was extreme fear at 19. And last month was fear at 27. Let's take a look at our 5 articles today. Article number 1 is, here's how much Bitcoin may be worth by the end of this decade. Article number 2, Bitcoin difficulty reaches new peak, what this means for the market. Article number 3, want your salary in Bitcoins? Here's why you should think twice. Article number 4, Ethereum likely to capture a portion of the 123 trillion global money supply. And last but not least, the main topic today is the IMF warns El Salvador to drop Bitcoin as a legal currency. All right, before we get into the articles, just want to say thank you so much for all my supporters. Thank you for checking out Dave's Daily Crypto Take on Apple, Spotify, and Google Podcasts. And if you're in the YouTube space, please like, share, and subscribe. It does help me out greatly. All right, let's get into it, everyone. Article number 1 is, here's how much Bitcoin may be worth by the end of this decade. So all of the cryptocurrency industry appears to be in a panic after $100 million were liquidated in around 24 hours. This has caused Bitcoin's price to dip 3.6% during this time, adding on to the 28% it has lost in the entire past month. BTC to cross $1 million? Well, while many are fearful of a bull cycle engulfing the market, researchers at Ark Invest have painted a rather bullish narrative for the King coin going forward. In a report published earlier this week, it was predicted that it could in fact exceed a price valuation of $1 million by the end of the decade, a long shot from its current price tag of around $36,000. To be specific, the report predicted $1.36 million per BTC with a market cap of $28.5 trillion by 2030. This estimated future valuation was reached after the researchers added up the expected values of each of Bitcoin's 8 use cases. These included remittance network, emerging market currency, economic settlement network, nation-state treasury, seizure-resistant asset, corporate treasury, institutional investment, and digital gold. So crypto plus remittance equals future. The report predicted that by 2030, the top cryptocurrency will account for 50% of global remittances at 1.5x velocity, 10% of emerging markets currency, 25% of US bank settlement volumes, 1% of nation-state treasuries worldwide, 5% of global high net worth individual wealth, 2.55% of institutional asset base, 5% of the cash from S&P 500 companies, and 50% of gold's total market cap. The report noted that the Bitcoin payments infrastructure has already expanded greatly in the past year, as its cumulative transfer volume increased by 463% in 2021. This allowed BTC's annual settlement volume to even surpass Visa's payments volume. Further adoption through these use cases will cause Bitcoin's global market cap to inflate 25 times, according to Ark researchers, even as it only makes up a minute percentage of the same. Moreover, scalability of the network through the Taproot soft fork, along with layer 2 protocols such as the Lightning Network, will further aid BTC's rise to a leading asset class. It noted that LN channels and BTC capacity on LN increased 119% and 210% respectively in the past year. So Bitcoin to advance in DeFi too. What's more, it also found that almost 1.5% of BTC's current circulating supply was wrapped in Ethereum by November 2021, indicating that Bitcoin denominated DeFi is also gaining ground. Other factors contributing to ARK's bullish outlook were the apparent maturity of BTC investors who are focused on long-term fundamentals, along with a significant rise in popularity among institutional holders. The report was also optimistic about BTC mining's capability to steer energy production toward renewable resources and noted that it was itself a multi-billion-dollar industry. It added, quote, converting energy into a monetary asset can be critical in times of geopolitical uncertainty and financial market volatility. As energy buyers, Bitcoin miners could incentivize new and more efficient forms of energy generation. Regardless of the positivity ARK has shown in its future potential for Bitcoin, a hurdle remaining in the way is regulatory uncertainty. As the threat of pushback remains imminent, it could hinder further adoption of the asset. In fact, the approval of ARK's own Bitcoin ETF was delayed by the SEC earlier today, and possibilities of receiving a nod remain thin, going by the agency's track record with similar fillings in the past. So there you guys have it. What do you think about this article? Here's how much Bitcoin may be worth by the end of this decade. Comment down below and let me know what you guys think. Article number 2, Bitcoin difficulty reaches new peak, what this means for the market. Data shows that the Bitcoin mining difficulty has set a new all-time high recently. Here's what it may mean for the market. Bitcoin mining difficulty has made an all-time high, according to the latest weekly report from Ark Research. While BTC's price has continued to struggle, the mining difficulty has seen growth and hit a new all-time high. The mining difficulty is a measure of how hard it is to find a valid block to mine. After every 2016 blocks, the Bitcoin network adjusts its difficulty based on the current block production rate. A relevant indicator here is that the hash rate, which measures the total amount of computing power that's currently connected to the BTC blockchain. As the value of this indicator rises, miners are able to produce blocks at a faster rate than the crypto is programmed for. The network then increases the difficulty to counteract this rise in the hash rate. On the other hand, if the metric decreases in value, the production rate becomes slower than needed, and the difficulty is then automatically also lowered. Now, here is a chart that shows the trend in the BTC mining difficulty over the past year. As you can see in the above graph, the Bitcoin mining difficulty had crashed down back in June as a result of China's crackdowns. Since then, the indicator has been rising up and now has made a new all-time high. The price of the crypto, however, peaked back in November and since then has crashed down almost 50% in value. The report expects the mining hash rate to continue to rise in the near future. This means that difficulty will also keep on going up, leading to smaller profits for miners. During bull runs, any rises in the hash rate don't affect miner profits much as the Bitcoin they mine goes up in value, making up for any lost revenue due to the difficulty. But since the BTC price has been declining recently, miner profits will continue to shrink. Because of this, mining stocks that performed so well during 2021 would find it hard this year. So the BTC price. At the time of writing, Bitcoin's price floats around 46.7K, down 13% in the last 7 days. The below chart shows the trend in the value of BTC over the last 5 days. So there you guys have it. What do you think about this article? Bitcoin difficulty reaches new peak, what this means for the market. Comment down below and let me know what you guys think. All right, article number 3. Want your salary in Bitcoins? Here's why you should think twice. The cryptocurrency boom reached new levels by touching on salaries in some countries. The millennial generation preferred to receive payments in cryptos. Fair to say, cryptos are part of the new financial model, and crypto salaries are part of these advances. Among the politicians who seek to bridge the gap between crypto payments against fiat are Francis Suarez, the mayor of Miami, and Eric Adams, the mayor of New York City. On the other hand, athletes planned executed to follow the same. So the mixed signals. Now, different individuals had showcased interest in getting crypto salary. However, the price volatility as well as tax complications may steal some sheen from the trend. At the time of writing, Bitcoin slashed around 11% of its price within a week. Although the King coin did recover a bit at press time, it was trading just above the 37K mark with a 3% surge in 24 hours. However, with this drop in price, the entire paycheck could shrink by that amount as well. Bloomberg's recent report highlighted these concerns. Crypto could certainly drop, they say, but so too can it catapult to levels higher than you'd ever expect from any annual raise in a fiat denominated salary. One of the biggest allures of being paid in a prominent cryptocurrency is, of course, growth potential. Over the past decade, the price of a single Bitcoin has skyrocketed from several dollars to then 64K. Many even opined that the King coin could reach the 100K mark. But one of the main rules of investing is that past performance is not indicative of future results. That stands no matter what. Quote, to be sure, most people receive their salaries in smaller disbursements over the course of the year. This can mitigate some of the severe drops of a crypto paycheck by spreading out potential gains and losses over time. But what happens if there was a major price change between the last day of pay period and the day one received paycheck? You might be making it out like a bandit, said Matty Greenspan, founder and CEO of Quantum Economics. But if prices retreat, you might also be shooting yourself in the foot. So next problem, please. Moving on, tax filings was another concern for BTC holders, let alone getting fully compensated with the flagship coin. Complicated taxation calculations are one reason why crypto paychecks can be a headache for both employers and employees. Shihan Shiranskra, head of tax strategy for CoinTracker, opined, quote, there's always a difference between how much the employer paid for that coin versus the market value at the time they're dispensing it as salary because the price changes. At that point, the employee is on the hook to figure out the date you received the coin and the market value of when you received the coin, he said. Here's an example of perfectly sum it up. NFL star Odell Beckham Jr. decision to make his 750,000 salary in Bitcoin appeared to have cost him dearly due to the market crash after he signed the deal. OBJ was estimated to have made 61% less than if he had taken his salary in fiat given the aforementioned obstacles. Sports business analyst and senior executive producer for the Action Network, Darren Rovell, reiterated the same concern. The amount of people applauding players changing their salary into Bitcoin as if they were heroes has been comical. Rams WR wide receiver Odell Beckham Jr., at least in the moment, provides a cautionary tale. However, Bitcoin enthusiast Joe Pompliano, brother and influencer Pomp, was quick to counter this narrative, but it didn't stand that way for long. I know that it fits your narrative, but it's simply not true. The deal was announced on November 22nd, not November 12th. NFL players get paid weekly, not 100% upfront. Cash App paid him 7 figures in marketing money. That's more than his entire contract with the Rams. So here, this isn't the first time that crypto assets caused major taxation discrepancies. So there you guys have it. What do you guys think about this article? Want your salary in Bitcoins? Here's why you should think twice. Comment down below and let me know what you guys think. All right, before we head into round 2 of the articles, just want to say thank you so much to everyone that's been messaging me and also commenting. I've been seeing all the love and support, so thank you so much. I've been looking at where people have been listening, and a lot of you have been listening to my podcasts on Apple. But of course, if you have Android, check me out on Spotify and Google Podcasts. And if you're in the YouTube's place, please like, share, and subscribe. So let's get into round 2, everyone. Article number 4 is Ethereum likely to capture a portion of 123 trillion global money supply. Despite the fact that a bear market might be taking over, fund managers remain hopeful about the crypto space in the long term. In fact, the most recent report by Cathie Wood's Ark Investment has claimed that both Bitcoin and Ethereum have trillion-dollar futures lying ahead, owing to their continued growth in utility. Ark Invest tweets, to enlighten investors on the impact of breakthrough technologies, we began publishing big ideas in 2017. This annual research report seeks to highlight our most provocative research conclusions for the year. The report boldly predicted that the market capitalization of Ethereum could cross $20 trillion within the next 10 years. This could push up Ether's price to around $170,000 to $180,000, despite the fact that it is currently sitting at $2,410 after losing 22.2% of its value over the past week. Bitcoin to cross 1 million. Well, as for Bitcoin, the report predicted that the King coin is likely to scale as nation states adopt it as legal tender, adding that the price of one Bitcoin could exceed $1 million by 2030. Ark Invest based its bullish outlook for Ethereum on its rapid growth in both utility and user base, boosted by the emergence of niche sectors such as non-fungible tokens. However, the most appealing sector has been that of decentralized finance, which Ark described as, quote, decentralized finance promises more interoperability, transparency, and financial services while mining intermediary fees and counterparty risk. The report further noted that smart contracts and decentralized apps on Ethereum are usurping traditional financial functions at the margin. According to the same, banking and lending exchanges, brokerages, asset management, insurance, and derivatives can all be found on Ethereum-based smart contracts, it said. So, according to Ark's research, Ether is both the preferred collateral in DeFi and the unit of account in NFT marketplaces, suggesting that it is likely to capture a portion of $123 trillion global money supply. It was further highlighted that decentralized finance actually managed to outperform traditional finance over the last 12 months in terms of revenue per employee. In fact, it could overtake traditional financial services, it said, adding that its native token, Ether, could compete as a global money. Ark Invest also pointed out Ethereum is a work in progress, and its constant evolution on the development front could accelerate its adoption and utility even further going forward. Moreover, it observed that while the shift to proof of stake could and would definitely be a right step on the environmental front, Bitcoin and Ethereum currently using the proof of work consensus protocol could accelerate the world's adoption of renewable energy. Ark's positive outlook for Ethereum and especially DeFi has come at a time when the market is battling a bloodbath, which has wiped out billions. Experts have been predicted that if the bear market ensues for a longer time, it could result in the obliteration of almost 80% of the dApps currently in operation. The DeFi total value locked has already lost upwards of 200 million in the past week owing to fear-triggered liquidations. So there you guys have it. What do you think about this article? Ethereum likely to capture a portion of $123 trillion global money supply. Comment down below and let me know what you guys think. All right, last but not least, the main topic today is the IMF warns El Salvador to drop Bitcoin as a legal currency. The International Monetary Fund, IMF, has urged El Salvador to drop Bitcoin as legal tender and better regulate the digital wallet the government created and promoted to its citizens. The South American country became the first in the world to adopt the cryptocurrency as legal tender in September last year. However, the IMF has urged the authorities to narrow the scope of the Bitcoin law by removing Bitcoin's legal tender status, it said in a statement on Tuesday. The adoption of a cryptocurrency as legal tender, however, entails large risks for financial and market integrity, financial stability, and consumer protection, it added. Bitcoin as legal tender, Salvadoran President Nayib Bukele led the push to adopt Bitcoin as legal tender alongside the US dollar. El Salvador's Legislative Assembly passed a law in June, making it the first country in the world to do so. El Salvador now has enticed 4 million people to start using Bitcoin, which essentially works as a government-backed electronic wallet. President Nayib Bukele argues that it's a way of offering digital banking to the great majority of the population, around 70%, who don't yet use a bank. But recently, Bitcoin has once again shown how volatile it is. After nearly doubling in value in November, Bitcoin has plunged and on Tuesday was slightly below $35,000, where it was when Congress voted on June 9th. From the start, there were concerns that the decentralized digital currency like Bitcoin, created to be beyond the control of governments, would attract criminal activity. Bukele promoted the adoption as a way for Salvadorans to avoid money transfer fees when relatives living outside the country sent home remittances. So, divided opinion over President Nayib Bukele's move. Bukele remains a controversial figure. He became a darling of the cryptocurrency's promoters and has since spoken of building a Bitcoin city and issuing Bitcoin-backed bonds, something IMF directors have also expressed concern over. He has also spent tens of millions of public money investing in Bitcoin, buying more tokens when its value has dipped. As the price of Bitcoin plunged last week, he took to Twitter to urge people to invest in the cryptocurrency. Quote, most people go in when the price is up, but the safest and most profitable moment to buy is when the price is down. It's not rocket science. So invest a piece of your McDonald's paycheck in Bitcoin. Now go back to flip more burgers, you lazy guys, he tweeted. Despite being quite popular in El Salvador, many citizens have not bought into Bukele's Bitcoin vision. Opinion polls show Salvadorans are skeptical about his love for Bitcoin, and his bumpy introduction has fueled protests against the government. The government hasn't yet formally responded to IMF's warning, but on Wednesday, President Bukele poked fun at the fund in a tweet. So, El Salvador's economy poised to improve. Well, the IMF did commend El Salvador's government on its management of the COVID-19 pandemic. The country is currently experiencing a surge of infections, but it was aggressive in vaccinating the population and kept a relatively low death toll. It also noted that the economy was projected to grow 10% in 2021 after contracting 7.9% the year before. The board does foresee other problems on the horizon. However, if the government doesn't tighten up its spending, persistent fiscal deficits and high debt service are leading to large and increasing financing needs, the statement said. Under current policies, public debt is expected to rise about 96% of GDP in 2026 on an unsustainable path. So there you guys have it. What do you think about this article? IMF warns El Salvador to drop Bitcoin as a legal currency. Comment down below and let me know what you guys think. All right, before we head out, let's take a look at the prices one last time. At number one, we got BTC at $37,198. Ethereum, $2,424. Tether, $1. BNB, $391. USD coin, 99 cents. Cardano, $1.05. XRP, 60 cents. Solana, $89. Terra, $54. And last but not least, Dogecoin at 14 cents. So there you guys have it. Thank you so much for making it this far into the podcast. Again, this is Dave's Daily Crypto Take. Catch me on Apple, Spotify, Google Podcasts. And if you're in YouTube space, like, share, comment, and subscribe. Until then, I hope you guys have a great crypto day, and I'll see you guys in the next one. Peace.